Wrapping up this part, the main role of accounting, its core purpose, is to give managers the financial insights they need to actually operate the business day to day.
Crucial for internal management.
And also to give other users, people outside the company, the information they need to judge its economic performance and its overall financial health.
Spot on.
Okay, so that leads perfectly into the next question. Who are these managers and other users? Who is actually consuming all this accounting information? They're all trying to make decisions based on it, right?
Exactly. And we can split them into two main groups, internal users and external users.
Okay, let's start with the internal ones. Who are they?
These are the people inside the organization. So top executives, managers at different levels, department heads, maybe folks in HR, marketing, finance.
The people actually running the show.
Precisely. And their main goal in using accounting information is for planning and controlling the operations, making decisions about resources, efficiency, strategy.
And they need pretty detailed info, I imagine, and quickly.
Absolutely. They often need very specific, frequent reports, maybe daily sales figures, weekly production costs, monthly budget comparisons, and of course they have full access to all the company's internal data.
So they might be asking questions like, what?
Well, HR might be asking, can we actually afford that proposed pay raise across the board?
Right.
Management might be looking at reports and asking, should we discontinue this particular product line? Is it profitable enough?
Or marketing asking, what price point for our new product will maximize our profit based on cost data?
Exactly. Very operational, very detailed questions.
Okay, so that's the insight team. What about the external users?
These are individuals and organizations outside the company who have some kind of stake or interest.
Like who?
Think shareholders, the actual owners in a corporation, potential investors deciding whether to buy shares, banks and other creditors considering lending money.
Suppliers, maybe, deciding whether to extend credit.
Definitely. Also government agencies like the tax authorities or regulatory bodies.
Labor unions negotiating contracts.
Yes, they'd be interested in the company's profitability and ability to pay. Even customers sometimes, especially for long-term contracts or warranties.
And their needs are different from the internal users, presumably.
Very different. They typically need a broader view. They want to know about the overall company's financial performance. Did it make a profit or loss? What's its overall financial position? What does it own? What does it owe? And how is its cash flow looking?
So, more summarized information.
Generally, yes. They receive periodic reports, usually quarterly or annually, in the form of those general purpose financial statements we mentioned. And the key difference, they don't have access to the company's internal detailed records.
Right, so their questions are more high level, like,
An investor might ask, did the company earn a satisfactory income last year? Is it growing?
or a bank looking at a loan application would ask, will this company realistically be able to pay back its debts? What's their debt level already?
Precisely. Different audience, different questions, different level of detail needed.
So it sounds like this continuous cycle. An economic event happens.
A sale, a purchase, paying wages.
The accountant analyzes it, records it according to the rules,
Applies the principles.
which then gets summarized into those financial statements.
The income statement, balance sheet, etc.
And then those statements go out to all these different users, internal and external,
Who use them to make their decisions.
which then influences future economic events, and the cycle continues.